Welcome, traders. Today I'm going to go over some really simple setups that repeat over and over multiple markets and discuss how we can trade those setups, rinse and repeat. Now, in the beginning, I'm going to go over an analogy just to get this out of the way. This is the psychology that needs to be adopted for these setups. Now, the first thing I'm going to describe is the vulture. You see, vultures are scavengers. So, with that being said, scavengers go out looking for dead weight. They go out looking for meals that have already been eaten. Scavengers, hunters, hunters sit and wait. For example, there are certain serpents, excuse me, there are certain serpents and bigger cats that will sit and wait at a specific location and wait for not just any animal, more preferably a injured or lame animal, and use that and hit their target. They're hunting, they're hunters. One thing about a true hunter is that a real hunter knows where to hunt. Scavengers go out looking, go out using all of their energy, looking, keyword, looking, because a lot of traders, they have one simple problem. They're looking for trades instead of hunting at a specific location because that is where the institutions do their work and shift the money from the many to the few. Now, the setup that I'm going to go over today is a high of week reversal setup. There are a few signals that could give us the indication of a high of week reversal. I will not go into that today. Today, I'm just going over on the day what I'm looking for and what I need to see to execute my trade setup. So, for example, there's only two types of trades. There's trend trades, there's reversal trades. There's pump and dump setups, there's dump and pump setups. Now, obviously, the high week reversal is a pump and dump template. This is on Wednesday, day 3, and the New York opens, and we're at the high of the week. Now, I get this question a lot, and the question is, well, does it have to be at the previous week's high? It can be, but listen to what I'm saying here. A high of week reversal. These high of week reversals can be at the high of the week. That can go over a lot of people's heads if they're not paying attention, if they're not understanding that I am sitting and waiting at the high of the week. And when my setup appears and my entry criteria is fulfilled, I execute with absolutely no fear. This is a high week reversal. I don't need gaps, sweeps, blocks, hunts, liquidity raids, consequent encroachment, 50% levels. I don't need any of that. All you need is the high and low of the day. And I'm waiting at the high of the week. I'm waiting for the market to open. I'm waiting for them to show their hand. I'm waiting for them to lock in the high and go off the highest bull candle. I'm looking for them to trap longs, and when all time frames are in, when all time frames are triggered, they reverse the market. This is a pump and dump setup, a high week reversal. And as you know, I'm going to have plenty of examples of the same setup. There may be different variants of this setup, But for example, this is a high of week reversal as well. The entry may have not been at the high of the week because I'm not trying to pick the top. I'm looking for them to lock in the high, confirm that the high is locked in. Basically, all I'm saying here is that they are now making lower lows and lower highs, and I can short the market in a short direction, a pump and dump template. Now, if I zoom out, of course, the entry was on the inside after the P formation high was put in place. But as you can see here, the low of the week is way down here. The high of the week is way up here, even though the entry is here below the 20, 50, 100, and 200 EMA. You're still reversing at the high of the week. And if traders were to wait at 10 a.m. or wait for the 10 a.m. open, they break out, they pull back to the closing price of the day, which is now acting as a ceiling, and they proceed to drop another 30, 40, potentially even another 50 pips from the high of the week. This is a high of week reversal. Now, again, I'm not trying to trade my favorite instrument every single day. I'm not trying to figure out where it's going to go. I could care less about where it's going to go. And the market makers, honestly, could also care less about what you believe and what you think to be true because the markets are simple. They go up, they go down, they pump for a dump, they dump for a pump, they break out, they range. It's not rocket science. And you do not need a bunch of fancy terms to understand that if I am selling, for example, I'll take all of this off. If I am selling, I want to sell on the back side of the trend up. I want to see breaks and structures, lower lows, lower highs, breakouts. I'm just going to get in. I have stops that have not been hit yet because breakouts are triggered. Breakouts are triggered here. And the usual breakout strategy is breakout orders up top, stop losses on the other side. Because if this breakout succeeds, they should not hit their stops. But since breakouts are triggered and they are trapping longs up top, breaking down, longs are being trapped. If longs are trapped, my bias is short because now the only target to get these longs out of the market is on the other side. And again, we can do this all day. Any pair, anywhere, any market, it doesn't matter. I want to trade from the high of the week. The high week reversal setup is a very lucrative, scalable rinse and repeat setup. See, I'm not on a 30-second chart trying to diddle around with gaps and sweeps and consequent encroachment and all of these things that absolutely do not matter. These fairy tales, illusions, because again, everything is timed and measured. This move occurred from the double zeros, a major round number level, a psychological level. This was our ceiling. They consolidated up here at the high of the week, and usually large moves occur or come from consolidations. But point again, I want to trade the pump and dump schematic. I'm looking for a high of week reversal setup around the same times. I'm waiting for the market to open. I'm waiting for them to break down. I'm waiting for them to lock in the high. They may have already locked in the high. And how do I know the high's locked in? They engulfed. Listen to me. They engulfed. That's it. The candle closes below the highest bull or bear candle if it's a high or low. And that is how I know that that is a high. That doesn't mean sell the high because I still need to confirm the lower high for me to enter my trade. And they do that. They break down, they pop back up, they engulf. Listen to me. They engulf. That candle closed below that bull candle. That is now a lower high. And they also closed below the 20, the 50 with the 100 and the 200 EMA at a major round level in the third hour, right at the beginning of a new 30-minute cycle, which is also a 15-minute cycle. That's time compression and collapse. It's not about the pair. It's not about how many pips it's moving, points it's moving. It's about how much size can you put on that setup and can you repeat it with the utmost simplicity. And it wouldn't be a video if I didn't bring a current example. This was earlier today in the New York session. Now, yes, this did occur before the 9:30 New York Open, but as some of you may not know, the currencies open at 8:20, and at 8:20 a.m. they pump this back up to the previous day's high, where the peak formation from London has been placed. They've closed in breakout. It's Tuesday. We're above the opening range. We're at the high of the week. We have lower highs. So this is the high. That is the actual high. They break structure, giving us a lower low. And what? A lower high. And they pump back into that lower high. They close below the EMAs, indicating that all time frames are in, institutions are in, algos are in, banks are in, positions are in, and they collapse down through the low of the day, through the closing price. We're above 50, which is 50% of the box, the real box from 0 to 0. And again, this is a high week reversal if this is what you are looking for. It's the same setup, different pair, different variant. Does it matter? And again, this was the SPX today at the high of the week after they triggered the previous day's high, which is Monday's opening range, Tuesday's the initial balance. And this is the actual high of week. But as you know, I want them to lock in the high. I want to see the high be locked in. And I want to see them trade back into it. I want to see them trap traders up high. I do not need 50% consequent encroachment levels of these wicks. I do not need gaps or blocks. All I need is the high and low of the day. I'm at the high of the week, time, and price. So we're in between the 00 and 75 quadrant. Yes, this is only a nail and bail opportunity back to the closing price. But as you can see, it was a really quick, easy move back down from the high of the week because I'm hunting for this. I'm not looking for this. I'm hunting for this. See, if you're still looking for trades and taking trades, you're scavenging and you're not even making the real money. The real money is on the trades where you can place significant size on with confidence because it's a rinse and repeat setup that real institutions rinse and repeat. And if I go in the other direction, then I'm looking for a low of week reversal. It's the same exact thing. I'm at the low of the week. I let 9:30 open. This is the previous day's low as well, which is the opening range. Tuesday's the initial balance. Tuesday can typically expand the range, which they did here, but this is the current low of the week. They dump it down. They consolidate. I get a closure above the 20 MA. I'm in at the previous day's low level with a stop loss at the low of the day. And or I'm in after the higher low formation above the 20 EMA, above the 100 EMA, and or you're waiting for that closure above the 200 at the double zeros and you walk away. See, I don't need, and as a matter of fact, I don't want to think about entering the market. Real consistent executors do not think because it was pre-planned and preordained exactly where and what I'm going to do at a specific level, time, and specific behavior of price at these levels. Now, going to a daily chart, this is natural gas. This was a market that was giving us higher highs and higher lows. This is a daily chart. This is the low of the previous month. They've taken that out, closed back inside. Longs are underwater, excuse me, shorts are underwater. Longs are being induced into the market down here. They break out. This is the first day of the trading months. First day of the trading month can act as the opening range of the actual month. And as you can see, those boundaries were quite respected when they dropped back down to the opening range of the month, acting as a floor for institutional buying to step in, inside candle. But again, higher high. How do I know that is a higher high? They engulfed. They pin into the peak formation low and rally back up, break highs without closing higher, but they break highs, higher high, higher low. How do I know this is a higher low? I waited for them to engulf. And when they did engulf, just to go back at this, since I am in a market that's making higher highs and higher lows, again, I'm looking to buy low from the low of the day, the low of the week, the low of the session, or maybe even the high of the day if it's a perfect break and retest. But again, the low of day can occur anywhere. This is the gold markets of today. And just a warning not to get stuck on your favorite instrument because silver gave the low of week opportunity after the opening bell straight back up. So just wanted to demonstrate some simplicity, everyone. And if you've reached the end of this video, thank you for attending. What up?